All right. Hey, everyone. Mark here. Sorry I'm running a little bit behind. Usually I get this, I usually stream these a little earlier. So I appreciate you taking the time with me here on a Friday, pretty much at the market close. I know many of you are in Europe or even further east, and it could be some unusual hours for you. So again, thank you. All right, so in this session, we had a bunch of questions about Workhorse, our Workhorse options trade in the chat room. That's why I want to focus on that and really answer that in a lot of detail. Plus, we're going to take a look at Bitcoin, our Bitcoin trade, and talk about that a little bit, and some forex, because forex is still, the euro and the pound are in a nice area for a long. The reason why I have not sent that out today as a trade is because it's not a good idea to take forex trades on a Friday. Okay, so good candidates for next week. All right, so with that being said, let's get started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. Hey, pal, nice to see you. All right, so so let's get this going. I want to get some of this stuff quickly. First, if you're new to Greenbridge Investing, please make sure you subscribe to the channel here. Also, make sure you like the video if you like my work, and if you can, please share the video with your friends, because it's an enormous help and we really appreciate that. Also, if you have a symbol or a market that you'd like to see, please share it in the chat now. So once I complete my analysis, I can go through the charts and the markets that you want to see. All right, so let's get started with Workhorse. Now, Workhorse, we sent out a trade idea, what was that, like a week ago or something like that? Andrew sent it out. It was a short put, okay? So when you're shorting puts, you're basically looking, it's basically, it acts like a long position, okay? Now that was based on this move right here. Here, let me draw a box in there so you can see. By the way, if you have any questions about this while I'm going through it, please ask. So the short put was based on this breakout right here, okay? Hey, HS. And the idea was, since we didn't want to chase the stock, we would collect a premium if the stock performed well and basically ran away. Well, the stock didn't run away, okay? And now we're in a situation where we are in a position to take delivery, right? In 5 minutes, the market will close and we will be assigned the shares. So a couple of questions that we had in the chat room, one particular question was, what do you do when it comes to assignment? Is there something you have to do, or is it automatic? Well, with US brokers, it's automatic. So basically, on Monday, you'll see 100 shares long of Workhorse in your account. That's how it normally works. So I don't know if it's different with European brokers. It shouldn't be. But so you should see 100 shares in your account. Now, the advantages to doing something like this is, for one, you just got paid, or you're getting paid to take delivery of these shares, right? Because you took in a premium, right? That was a credit. That money stays in your account unless you close the position. If you close that option right now, yeah, sure, you'll take a loss, and that'll be that, and you will not take delivery of the shares. But if you want to take delivery, you keep the premium, which means your break-even point is the price minus the premium you took in. That's really where you're long from, okay? Not the strike price. It's the strike price minus the premium, because that's money that you've collected, okay? So basically, like I said, okay, photo, we'll talk about that, no problem. So again, you're getting paid to buy stock. Now, why we're taking delivery here instead of closing the position is because look what's going on with Workhorse. I had a couple of other questions about, if you're not in the options trade, is this still a good stock to buy? Would I recommend buying it? Well, let's take a look. Let's look at the location. My answer in the chat room is yes. I would be okay with buying this even if I was not in the options position. For one, yesterday's close gave us a pin bar. Okay, in a area, a potential higher or low location. We're basically at a range low, and we took out that high today. So buying this, it is technically a buy signal at a range low. Okay, yeah, he's okay, DJ. He'll be back on Monday. He can explain to you his situation. I'm not going to explain it. He can explain it. So, yeah, so basically here's what can go wrong, or here's what you have to consider. I shouldn't say go wrong, but here's what you have to consider. If you're buying the shares, again, there's a few minutes. If you're buying the shares, right, now we do have this bearish looking pin bar today, which means this thing might pull back a little bit more into this range support. That's one scenario that you have to be prepared for. Okay, I don't have the specific orders, and I don't have enough time to send out the trade idea. But for something like this, if you have not bought it yet, one thing to consider is putting a bid below the market. Okay, so today's low is what? 22.43. So maybe you put a bid at $22 or something like that, because in theory, it could test the $20 area and reverse again. It's possible, all right, or maybe it won't. The thing is, you're in a general location. You have to look at this as a general area, right? You're not buying a high over here. You're buying into a low. So even if it fools around in the early part of next week, or maybe even tests this low, which will shake out weak hands if it pushes around here, that's the best place to buy if you want to wait for something like that. Now, again, we're taking delivery. So, we're going to be long from the strike price minus the premium, which is fine. It's the general area. Now, one benefit to taking delivery and being long the 100 shares is now we can sell a call against those 100 shares on a pop-up, and we can collect another premium. Okay, so, oh, cool, DJ. So, options give you that flexibility. And where else are you going to get paid to buy the stock? So there are risks to it, of course. If this thing sells off and breaks this range support and really sells off, well, you're going to take a loss if you don't. You should have a stop, and that stop at this point should probably be below this low. All right, if you put it below yesterday's low, that's probably going to be a little too tight at 21.53. So you're better off putting it like around the range low, lower than the range low, because that's the fake out area. So basically like 19.5, that's where you would define your risk from. Okay, remember, if this thing goes, we're looking to make a lot more than a couple of dollars. So right now, we're at 22.82. So if you get stopped out at 19.5 or something like that, what you're going to lose, like $3, $3.50, something like that. Okay, but if we're right in this trade, I mean, look, we can easily test this high right here, which you could see it sold off from there. Was it the $30 area? So, you're long from 22. If it tests this area again, you're looking at like $8. So that's better than 2-to-1 reward risk. So the trade in its idea makes sense. Okay. So those are pretty much the answers to the workhorse situation. If you have any questions about that, please let me know. If you're new to Greenbridge, and you're not a member, then you don't know anything about this trade because you obviously didn't receive the trade idea by text and by email. So if you want those, go to our website, sign up for the 7-day free trial. We are raising our prices soon. So if you want to lock in our current prices, now's your chance. All right. So let me go over a couple other things here. Any questions about Workhorse, please share in the chat. I want to run through Bitcoin real quick. All right, so Bitcoin. As you can see, the line on my chart, okay? It's still there. I drew this line on Sunday. So today's Friday. So far, Bitcoin wants to follow along, okay? But the tricky part is yesterday, this current candle that you see right here, this red candle, didn't look like that. It was giving us a bullish pin bar, okay? Now, obviously, it didn't close, right? Well, at one point, I'm sorry, this is yesterday's candle right here. Let me, here, this green one, okay? The green one. Sorry about the confusion there. And I put in the chat room, I said, there is an aggressive long signal here, but I'm most likely not going to call it. That's what I put in the chat room. You can go back and look at the text that I wrote. And I said the reason is because we're right below this major resistance zone, and I don't like buying into resistance zones. It's just a very low probability idea. Now, we're long from 675, from 10,675 anyway. We have 2/3 of the position, and we're waiting for the next leg higher. But if I see a new long setup, I will be prompted to share even another swing trade long idea for people that maybe missed the one at 675, or if you want to add to the one that you have, you'll have that choice. But I'm looking to do that at the 11K level if Bitcoin can give us a buy signal there. So nothing has changed there. Now keep in mind, in this situation, you're probably, if you start looking at the public forums and all that stuff, you're going to see a lot of bears coming out again with their same bearish nonsense. Oh, Bitcoin's going to 5,000. Oh, my oscillator said so. Okay. Again, if you're a day trader and you're looking to take a small bite on the short side, hey, you're coming off a resistance, no problem. But to be calling this thing and saying it's going to 8,000 or 5,000 is just not, it's not proportionally reasonable right now, because there's nothing here that says it wants to do that. We haven't taken out any supports, not even. Okay, so at this moment, this right now, this movement, this bullish movement is what's in play, right? And we're just correcting that a little bit. So anyone that gets bearish on this is most likely wrong. The reason why I'm telling you this is not because I'm trying to brag that I'm right. I'm telling you this because I don't want you to be distracted by people who don't know what they're doing, which is very common on these platforms. And then you get shaken out of your position, or even worse, get short for no reason. This thing isn't really doing anything. Okay, so again, still looking for longs, and we have nothing to worry about. We just hold on. And the next leg higher, if this thing holds and develops the higher low, the next leg higher should take us into the middle of that resistance zone, which is obviously, we have another target in there. Okay, so that's Bitcoin. Just wanted to update you on that. Let me see what else. So let me jump into forex real quick, and then I'll get to your questions. Okay, and and Photo, we'll talk to you about your situation there. So let's start with euro dollar. Now the reason why I'm bringing this up, again, I know we don't have a lot of forex traders, but you can learn. You can still learn from these ideas, because all markets pretty much behave like this. Okay, this doesn't matter if it's forex. But I am interested in the euro long. I've been talking about it. Haven't sent anything out yet. Look what's going on here. So we have this important support level at 1680. What is that? Yeah, 1680s. And again, today's low is 1693. And we're showing now a bullish inside bar. Why won't I send this trade out right now? Because it's Friday. And anything can change between now and Sunday. Okay? I probably won't even send it out Sunday evening, because volume is usually too low. Volume doesn't pick up in forex until Monday at like 3 or 4 a.m. Eastern time, which is the European Open. So, but I love the location here. I don't like it. I love it as a long. We have a nice pullback off of this attempt, this bullish attempt. Okay, basically this initial leg that took it up to, what is this price here? 1815 or whatever. Now we just have that little minor corrective move into a support. So I'm looking for longs here. Again, I don't know why people would be bullish the dollar. I don't want to really get into fundamentals. But as long as things stay the way they are in this country and we have a pro-business administration, a weak dollar is favored. Okay. Which means euro is probably, euro at least has pressure to push it higher relative to the dollar. I know euro has its own things going on and its own problems, but this chart is not bearish. Okay, people like to pick on these lower highs and say, oh, it's a bearish trend. It's not a bearish trend. The trend is bullish. Okay, just like gold, this trend is bullish. And you could see this area is just a broad consolidation. That's all it is, and you're basically near the low of it. So that's the euro. Watch for that, okay? If you trade forex, and you know what? If you don't trade forex but you're interested, you can always paper trade. You can easily open up a forex account at any broker and paper trade it. Okay? You can even paper trade it on TradingView. You don't need a broker. All right, now this is the pound dollar. Similar situation. Now the pound dollar is a lot more wild than the euro. Okay? The risk is greater because the moves are more, they're more dramatic. But it's in this similar situation. Now the support on the pound is much lower. The support is, what is that? 26.95, so basically around that 27 area, but you still may be developing the higher low situation with this bullish inside bar. So I like both of them as a long, but if I send one out, I'm only going to send one. You could trade FXE, pal, but I'm not a big fan of that ETF. Here, we could pull that up. That's the ETF of the euro. You know, here's why I don't like it, because it's very spotty and the volume sucks. And you know, I mean, sure, you could trade this thing because obviously it should follow the same movement, but it's so easy to open an account with any forex broker. You might as well just do it with a forex broker, or like I said, paper trade it on TradingView. All right, so the pound is the other one that I like. All right, but again, if I'm going to pick one, it'll probably be the euro because it's more stable than this thing. Because pound, really, the dramatic prices on the pound would be here, right, or lower. Okay, in this area, those would be the best prices to take a swing trade on the pound. Here, it's still doable, but it's riskier because if it fakes out and pulls back lower, it's painful and gets stopped out and all that stuff. That's why I like the euro better. But if they're going to go, they should both go together. And I'm not going to call both because it's both the same trade. It's both short the dollar, okay, basically. So just like when you're buying altcoins and Bitcoin, it's all the same trade. So those are the forex pairs I wanted to run by you real quick. Forex is a pain on taxes. Well, I mean, it could be, but the thing is, if you're trading with a forex broker, it's a derivative. You know, you're not really actually moving the currency around. It's a contract between you and the broker. You know, so it's just like income, like anything else. It's really not a big deal. You know, because you're not literally handling the currency. It's just like the idea of the currency. Okay. Anyway, all right. So that's those two. I want to run by that. Okay. So those are the things I wanted to cover. Let's get into what you guys have to say here. Okay. So, pal, looking at tech. All right. Let's take a look. Tech. It's consolidating a support area. Also curious to see where you targets are good are on PFE. Okay. All right. And someone mentioned something about, I think it was in the chat room. Someone mentioned something about, was it Nicola? Hold on, let me take a look at Nicola real quick. Yeah, look, that thing, all right, we got to talk about this too. All right, so let me just go back to tech. Sorry, I just got off the, all right, okay, back on track here. So, I mean, this thing is strong, clearly. Higher lows, higher highs all over the place, okay? No problem there. You have a consolidation inside of here. All right, typically these are trend continuation patterns. And you just need a breakout. So one thing you want to do is look at the inflection points and define risk. So these are the inflection points, basically what you're dealing with right here. You have these supports. What is that? 13, 15, or you could even round that to 13 and a quarter, and basically 12 and a half, right? That's your support zone in that area. If you start taking out these lows, like this 13 whole number low, then it'll probably, you know, test that 12 and a half area. If it does not take out that low, because you have a double bottom there, and instead takes out this high at 14 and a quarter, you're probably in your next leg higher, which is within reason to at least attempt that high, which is what, 15 and a quarter? And in theory, it should break higher, okay? Now, let's look back a little further and see what kind of resistances you're looking at here. That's that one. Let's see back here. So you have one around here, about there. So 16 and a quarter, and then you have one above that, which is way up here. So basically like every dollar and a quarter or dollar and a half, you have like a level. So you can even use those as targets, okay, if this thing goes. So if you're buying this thing now, I don't know where you're long from, but if you're buying this thing at 13 and a half and you're risking $2, let's say, you know, your first target should make up for that pretty easily, okay, on something like that. So the reward risk makes sense. This is a nice one, pal. Pal, you always pick up good ones. Yeah, I like it. I like it as a long. I mean, now as far as today's candle, you know, that's not the best close, but you know what? It's, you know, it's still inside the range, so I wouldn't worry about it, okay? Now we'll take a look at the NASDAQ and the S&P here in a moment just to see how they closed. Now your other question here was Targets on PFE. All right, let's take a look at PFE. And let's see, PFE. So, oh yeah, okay, nice pop there. Let's take a look at, let's look back here and see what's going on. I mean, these are these pharmaceutical stocks. I'm not a big fan of these because they're so sensitive to news. But obviously, they're in play, they're in play. All right, so let's see here. That's your support, and that's your, that's one resistance. What number is that? That's 39 even, right around here, this area. So that's one target. Look, with this vertical close, that's a nice close. So if you're long this thing, pal, at this moment, there's nothing to do but let this thing run, right? I wouldn't even lock any profit here because that's a nice close. So at least in this situation, since it's trying to go, let's see if it tests that 39 and breaks. If it breaks higher, great. You should get that higher high. Oh yeah, well I can tell that from just this pattern without having to look at the monthly. I mean, look, it's one gigantic inverted head and shoulders, right? And you have a broad higher low right in this area here from that double bottom. Real nice setup. So something like this, pal, again, I would be a little more aggressive with it and just hold on, basically, right? And not be quick to get out because in theory, it should go for the higher high. So you can see, I would start locking in profit in those 39s if it gets there and gives you a hard time. If it doesn't give you a hard time, just let it run until it gives you a hard time. What's a hard time? A red candle, a bearish pin bar or something. If it starts to go and then it starts to do this, like see these red candles at the resistance area, that's where you should be considering taking something off the table, okay? So that you don't run the risk that it pulls all the way back to the range low. At least you lock something in. But at this moment, wow, nice stock, okay? And in theory, because this broader structure is so, that inverted head and shoulders, like if this thing breaks out, it has some potential here. I mean, this thing could even run into the low 40s there. All right, so nice stock. Thanks for bringing that one up. But I like tech a lot too. I like that one. Okay, so photo guy. All right, so can you want to share a little bit what you did today so that maybe I can help you? Like what were you in a stock? Were you in, what kind of market were you in? And can you give us an idea of what went wrong? Okay, made a couple of good trades. Okay. Okay, all right, photo. Okay, so, but I really thought I was making some. Okay. Okay. Well, 2,500. All right. Well, if you're new, if you've been doing this less than a year, you should probably not be risking a lot of money. Okay. But so give me an idea. Okay. You bought puts. Okay. All right. Okay, so let's take a look. Oh, you bought puts. All right, on this thing. Now, all right, why did you buy puts? You're betting on the pullback? Because I mean, this thing is strong. This thing is really strong, right? And that's why I go through these things with DJ all the time. Like DJ will bring up a stock like Roku and say, what do you think of puts on stocks that look like this? And those are very aggressive. They can work, but they're very aggressive. And they're usually better for experienced traders. You shouldn't mess with these going against them. Okay? In situations like this, you should just let it go. Find something else to trade because you don't want to be buying the high and you don't want to be selling the high. You want to just wait for a pullback, and it's better usually to find other stocks. Or better opportunities. Now, look, I understand. We've all been there. I've gotten beaten up plenty of times, and trust me, in the over 20 years that I've been doing this, trust me, I understand. So you can't get discouraged for one. But what you have to do, though, it's so important. You bought a put yesterday. Oh, okay. You bought a put yesterday, and this thing is lower than. I don't understand. So how'd you lose money? You bought a put yesterday and this thing is minus $5. So shouldn't you have made money in this? Or did you bang it out? Maybe you banged it out at a bad price or something? Let's see, let me just go back to your message here. Did you get, I just don't understand your situation. But okay, so maybe you could be more specific on that. All right, so DJ, but you bought some more Nicola at $20 today. All right, so hold on, photo guy. All right, I'm just reading through these here. Okay. Yeah, so photo, if you can, just tell us a little bit more about your position and your situation, and then I'll give you some things to consider. You bought puts at the low yesterday. Okay. Well, you must have bought a lot of puts then. I mean, how much is this thing? It's $131 stock. Okay, so obviously puts are not going to be cheap. So, here's the thing. You're playing with options. Obviously expensive options. I mean, the way this thing is moving, I know the options are not going to be cheap. You really, for one, I don't know how much experience you have in terms of time, but you really, wow, okay. Yeah, you can't play those. When you're going long options, so you're gambling, all right? That's basically what you're doing. When you're going long options, like when we go long options, I go for at least 3 months of time. Okay, 3 months, 6 months, maybe a year. Sometimes, like DJ brought up, what was it? I forget which one he brought up. I think it was Jumia or one of them. We bought like a year's worth of time in that thing. Okay, that's what protects you against these situations, for one. But yeah, you can't buy options for 1 day and expect to make money consistently. You run into a lot of problems because the premiums will vanish so quickly. You have to be so right. And it's working against you so much. Not a good idea. So that kind of problem is easily corrected. It's just something you don't do. So that's why, with options, definitely you have to have more experience. To be honest, I wasn't comfortable with actually putting on options positions until 5 years of reading about them, basically, and playing around and paper trading. 5 years. So, it was until after 5 years where I was like, okay, I'm comfortable with, buying a call, buying a put, maybe selling a call, selling a put. But that was about it. And then, about 10 or 15 years into it, then, I was comfortable enough to be more aggressive. And then now it's just like secondhand nature. It's like, all right, whatever. I don't mind buying calls out of the money or buying puts out of the money, but time. You must have at least 2 or 3 months of time. And if they're too expensive, then you go find something else, right? Like I was looking, DJ brought up Roku, right? Let's pull up that Roku chart real quick. So yeah, you definitely shouldn't be discouraged. You just made a simple, I know it's an expensive mistake, but it's very easy to correct. It's a simple mistake. Roku, right? So DJ, 2 years. Okay, that's relatively new. It's better than a couple of months. Some people are in this a couple of months and they think that they know what they're doing. So DJ talked about like a Roku short, and I'm like, okay, on this island reversal, and I looked up the option premiums on this thing, and for like $50 out of the money, there were still, and a couple of months out, the premiums are like $500 per contract. Or I'm like, I'm not paying that. That's ridiculous. They're inflated premiums. So I'm not going to sit there and try to play weeklies on these or anything like that, because I know that if I'm wrong, that money is just out the window, right? There's no way you can come back from something like that. So, yeah. So it's really just about understanding the risk when it comes to time. Yeah, time value is everything. With long options, it's working against you dramatically. Okay, dramatically. That's why when you're playing short term with options, the more effective thing to do is to short them, right? That's why when we sell a put or we sell a call, it's front month, because those are most likely to become worthless. So you have to understand like where the probabilities are with options, and it takes time. Like I said, it took me 5 years, and I'm not exaggerating. To really get comfortable with options, the idea of how they work and all that stuff, with time value and all the different Greeks and all that stuff. So, and I read, it wasn't like I was just watching them in paper trading. I was reading books I was reading books the whole time about them. You know, I can imagine how exciting options books are. So anyway, all right, so just hang in there. And, you know, again, that's a simple mistake. Don't beat yourself up. I know losing the money sucks. Trust me, I know. But you just have to be, you just have to look at it as, okay, it's an education. You learn something. And you just have to, you know, just get beyond it. That's the best thing I can tell you. It's not easy to do, but I've been through it. You have to shrug it off and say, hey, you know what? I can still do this. It's still possible, because it is. It's just a matter of understanding the risks and the probabilities and the potential outcomes. Like if you had asked us, hey, I want to buy these puts for one day, there's no question, Andrew and myself, we would have said no. No way. It's just a very risky thing to do. Okay, so if you have any questions, just, you know, please ask. People ask us all the time. Ask, and we'll just tell you. We'll give you an idea. Now, look, we're not always right. We could be wrong. That trade may have worked out for you, and you'll be like, "Ah, why did I listen to these morons? I could have made all this money." But you cannot trade like that. You have to trade on probabilities and not react to things. Okay, so that's an honest mistake, you know, and it's one because you just didn't realize buying, you know, one day's worth of time is usually a bad idea. But now you learn. Okay, so thanks for sharing that experience. I'm sure, you know, other people have similar experiences, and we all can understand what you're going through. Just hang in there. Okay. Okay, Pfizer had news. And let me know if you have any other questions about that. Okay. Now let's see. Alice, Pack B. All right, so that's just here. So let's pull up Pack B. This is, we had a question about this today in the chat room earlier today. And I believe that the question was about buying it, right? So when I see something like this, there's no way I want to buy this because it's on the high. So I have to look for supports, right? So if you just look back a little bit, you know, you have, there's two types of inflection points. You have historical, right, which is based on actual price action. And then you have proportional, which could be like Fibonacci level. So that level, basically, that 950 is a Fibonacci level, Alice, to answer your question. It just basically measured this low to this high, and that's basically the area right there. Okay? So I would not touch this thing. My answer in the chat room was, I would not touch this thing unless it, for one, gave us a retrace. And the ideal retrace point would be to here. That's ideal. Now, I don't know if it'll get there, but if it does, that's where the high probability opportunity is, if it can give us a confirmation there. Otherwise, I'm not interested. Now, another thing that this thing can do is maybe it'll consolidate and give us a higher low, you know, above that level. Okay, fine. If it wants to do something like that, I'll be open to that. But at this moment, there's nothing to do. So if you're long this thing, hopefully you're locking in profits. You've taken some profit and you let some ride, because there's no reason to sell it. There's no reason to get out of the whole thing. This is a winner. You just let it run. So, but if you're not in it and you want to buy the pullback, or you want a high probability trade, wait for the pullback. Okay, there's plenty of stocks with pullbacks. So thank you for the question. All right, let me see what else. I know a lot, because I have a lot of, oh, okay. And Pfizer, okay, cool. Yeah, so Pfizer has a lot of fundamental reasons. I mean, obviously, it's a fundamentally good stock. Even though we don't talk about fundamentals, I don't really follow fundamentals. I know that much. So if anything, you know, they're a good company. It's not like you're buying CGC. All right, so let's see. Okay, DJ, I never played Roku because it was expensive and never gave the signal. Right. So that Roku trade, you know, we talked about it, and like I said, I'm like, oh, you know, I'll take a look at that Roku trade that DJ was talking about, which is, and we talked about how aggressive it was. We knew the risk, right? So it wasn't like DJ was like, oh yeah, I'm going to short it and make all kinds of money. We knew the risk, and like I said, when I looked up those premiums, I'm like, oh, forget it. You know, it's just too much. Now, if those premiums are cheaper, you know, for the amount of time, I'd be open to it. But I can find stocks with much, much cheaper premiums if I'm going to go long, and I can buy a lot more of them. So if I'm right, you know, it'll be a big winner. Like, look, NYCB. Look at this. This is an aggressive one that, you know, I also went over, and I never actually officially shared this trade, but I know DJ took it. Now, these option premiums are so cheap, okay? And I'm not talking about 1 month out. I'm talking about like 6 months out. These things are so cheap that, hey, it's like, why not? So, you know, you could risk basically $100 for like 10 contracts. You have 6 months, and if this thing pops to its range high over all that time, right, those 10-cent options may be worth $5, 50 cents, maybe $1. That's a home run, okay, in something like that. So is it moving hundreds in dollars for me and whatever? No, I'm only looking for a 40-cent move in the option, but I have 6 months for this thing to do it, okay? And that's plenty of time. I don't even have to watch this thing, right? And if it goes to zero, so what? I lose $100. I lose $100 just eating lunch. So, you know, that's no big deal, right? So that's how you have to play the long options. You have to find these cheap ones. Okay, and you know, if you have a few of them, they're not all going to work, but when they go, they go. Okay, like here, Nicola, right? DJ, you just mentioned you bought some Nicola. Let's talk about Nicola real quick, right? Was it DJ that mentioned? I think it was DJ. Yeah, right. You bought some Nicola. Right, let me find it. Yeah, I think so. Hold on, I'm just going through the. Oh, SPR. Okay, sure. I'll take a look at that. Bella. Okay, I'm sorry. I just missed some of the questions here. Sorry. I'm just getting back to these questions. All right. So wait. Let me go back here. Hold on. Nicola. Yeah. So it was DJ with Nicola. Look. So I want to talk about Nicola real quick. I've been talking about buying this thing. Okay. Been talking about buying it. Looking for this higher low to hold. Today, it closed bad. Okay, that's not the close that I wanted to see. Now, if you bought some at $20, okay, you know what? You didn't get a horrible price. It's not like you bought the high. Now, the thing is, you can define your risk from this level around here. What is that? Basically 16, that 16 area. It needs to hold it, okay? If it closes below that 16 next week, and starts pushing those 15s, it's probably a good idea to either reduce your position or take the loss, just in case this thing wants to go to 10 or 5 or something. You just never know with these, right? There's no reason to hold it and have a small loss turn into a big loss. So just something to keep in mind there. It was trying to set up, and then we got this. All right, no problem. So I'm still interested. I still like this one, if it can, especially if we get an inside bar or this candle reverses right away next week, which is possible. This may also be a good options trade as well, okay? Because the options, I know you can buy some out of the money options at like $40 in the $40, $45 area, and you can get them cheap. And I'm talking, you know, January or April options. I think they're pretty far out. And Nicola has all that time to get all excited on day traders' radars on some dumb news or whatever. Next thing you know, it's pushing 30 or 35. I don't need it to go to my strike price. I just need it to go somewhere quickly with, you know, with an option that has a lot of time in it, and my premium should be worth something. Okay, it's really all I'm looking for. So anyway, all right. So let me move along here. Now, SPRT, what is that? Let's see, support.com. Oh wow, look at that. That's nice, DJ. Speculative stock. Oh, Robinhood traders. Oh, nice. I guess they were communicating with you. Yeah, that looks like a Robinhood trader type of stock. Look at these levels. So this is where people get caught. Okay, bad place to be buying. If you're long from lower prices, great place to be locking in profit for sure. Look at this, nice strong close. So this thing may push a little further. I mean, look at the price. It's a cheap stock. So you probably have day traders all over this thing, on top of Robinhood traders. And you have some room to run to like maybe $3. There's some room to run there. But would I buy this now? No way. Okay. This is the kind of move I'm looking for from like Nicola, or off of like the higher low. Obviously, there's news on this because, you know, something is driving this, but not a good place to buy now. Good place to lock in something. All right. Now, the fact that it closed so strong, and basically you had pin bars there, you had these tails previously and it just completely ignored that and closed strong, that's a good sign as far as a breakout. But the reason why, you may say, well, then why not buy it? Because of the risk. Okay, if I buy this thing right now, okay, like on Monday, first thing, at $2.40, and it pulls back, I gotta, take pain. Like for what? I can find better stocks at better levels. So no reason to chase. I don't like to react like DJ said, Robin Hood traders. Okay, they're typically known to react to things, and that's not what we do. All right, cool. So thanks for bringing that one up. That's an interesting one. Bella wants to talk about dollar Canadian. All right, so dollar Canadian. Now this, I have a trade on here, but this is an old trade. I have to update this chart. This was an old trade that was, I think, stopped out. When I was trying to buy early in August, I was trying to buy that dollar retrace, right? And I was too early. So now here's the thing with this. I know Andrew called a dollar Canadian trade after this, right? A more recent trade. I believe it went to its first and second target, I believe. I just don't have that information on here. Here's the thing, right? So he caught the move that we were looking for, but I am not right now. I am not a fan of long dollar. All right, this broad trend, as you can see, right, lower high. Okay, we have a lower high over here. Okay, we have another lower high over here. So that's the dollar, lower high. So I'm anticipating another lower high. We have not taken out any of those lower highs. Sure, we have a higher low, and you can argue, what about the higher low? That's nice, but we have not taken out the lower high, which means the bearish structure is still intact. I'm anticipating a lower low, right? And long euro, okay, or long pound. So if you're long this, I would look to reduce exposure. If you have profit, lock in some profit, something. If you're looking for shorts, all right, it's not a bad idea. You have an inside bar, bearish inside bar. You take out the low of that inside bar, 31.77, so basically like 31.5. Then I'd be looking for that lower low, okay? And with the way the dollar is going, if this broad trend, this broader structure stays intact, you should be testing that low, theoretically, which means the euro should be going higher, okay? That's why I'm looking for longs in the euro. So if you're long dollar Canadian, or if you're short dollar Canadian or long euro dollar, it's basically the same idea, basically the same trade. Okay, so I hope that helps. Let me know if you have any more questions about that. Okay, right. So yeah, you have the active trade. So like I said, that's a long. I know Andrew took a long on that. Just be careful with that long. If you're still green, because I know some targets were reached. If you're still green, I would be looking to at least tighten that stop and reduce your exposure on that. Okay, until it starts breaking resistance levels, I'm not a fan on the long side anymore. Okay, let me see. All right, so let me catch up on the chat here. Okay, so let me see. So DJ is saying here, hold on, I'm just catching up. I am not sure if okay. Oh, don't take any calls from the web, right? Yeah, DJ brings up an interesting point, right? Like, I don't know where you got the idea from, but if you're following the idea from like some public forum, like TradingView or whatever, it's most likely, it may work sometimes, but it's usually a bad idea. The majority of these people, they don't really, a lot of them, for one, don't have a lot of experience, even though they say, oh, I have 5 years of experience. 5 years is not enough, for one. Okay, you're still, at 5 years, you're still sort of like a beginner. You're just getting into like the intermediate, okay, around 5 years, for one. For two, a lot of these people, especially if they're selling something, they'll make lots of calls just to get attention. Whether the calls work or not doesn't matter to them. Okay, but some will work and that will get them positive attention. Some won't work and they'll just forget about those. So yeah, so I just want to mention that since DJ brings that up. It's the same for TradingView. A lot of people on there, they have no idea what they're doing. In fact, it's good to be a contrarian, right? So a lot of times when we're like long Bitcoin and we see all the gurus are short, we know we're probably right. Okay, and then they flip-flop. Like the next day they'll all be long. All right, anyway. Okay, so Oh, okay. All right, no problem, photo. But yeah, DJ brings up an interesting point. It is a tough business. Oh, Pac B, right, was Andrew's call. Right, okay. Um, oh, right, okay, right. I remember that. I just, we have so many things going on, like I can't keep track of them all sometimes. I just like the stream, and in a couple of weeks, okay, okay, you could check out, okay, Bloom Energy. Oh, that's been on my radar, pal. This one's been on my. I've been looking at this. I like this stock. I mean, any of these energy. Look, we got an inflection point right there, support right there at basically 18.5 area, and it's in a good location for a long, but there's just no reason to go long at the moment. There's a bunch of other stocks in a similar situation, right? This goes along with like Sunrun. Let's take a look, run. Look, same idea. Okay, I'm preparing for a long on this one too, which I'll probably send out next week because I love this location. Look, today we got a lousy close. Okay, no problem. And you can see the support is a little bit lower, but I like that. It kind of goes along with the Bloom. Reggie, one of your favorites, right? Same idea, right? So they're all kind of the same idea. But I like Bloom Energy. I like the location and I like the structure. It's strong. There's no question it's strong. So we just have to wait for a setup. And this could be a good candidate for a swing trade long. I would like to see a bullish pin bar or a green candle at least or something. Okay, I'd be open to a single candle because this thing is pretty strong and this pullback is not really, it's not that steep. It's not like we took out any supports or anything. So this thing could recover quickly, especially in that strong sector. Okay, so definitely like the location. Just need some confirmation there. Thanks for bringing that one up. And if that one runs, if that one goes, I would anticipate the higher high at above 25. So targets could be like at like 24 something, 26 something, and then you could put a really aggressive target out there to see if it just goes there. Okay. So thanks for bringing that one up. Okay, let's see. I just bought Nicola. It's Friday and it reached your levels. All right, no problem. Yeah, no problem, DJ. I mean, it's aggressive. There's nothing wrong with being aggressive. As long as you understand the risk, there's no exactness to this, okay? And one way to manage risk is by smart position sizing. You don't go out and buy 1,000 shares in Nicola. You start a starter position. You start maybe with 50 shares or something that if it goes lower, you don't care. Okay, because the idea is you're trying to average into a position. If it keeps going lower, you don't average, you just don't add to it. It starts going your way, then you can start putting on more, and now you're building into something that's going your way. And that's how you catch a big move, okay? And that's very particular to swing trading. Very hard to do that intraday. Okay, I placed options trade, okay, no problem. 421, wow. So you see that photo? So DJ placed an options trade for Nicola at $1.80. Okay, so he's trying to buy a call at $180 per contract for April. That's cheap. Okay, that's pretty cheap. He's got like, what is that, 6 months worth of time for $180? That's pretty good. All right, what are the chances, Nicola? What strike price was that you were looking for? Was it the $20 strike? Or how far out of the money? But the thing is, you have all that time. All Nicola needs is some news, some kind of break. Next thing you know, it's pushing 30, and these options will be worth a lot, right? That's how you get a home run. That's how you get a home run on those. Okay, you got to buy them cheap, and you got to buy time. If you can't buy cheap time, then the next best thing to do is to short them. Okay, short options. But that's where you're trying to take advantage of those inflated premiums. But as you know, with Workhorse, right? Because this Workhorse situation is a short option, which we sent out, right? It was I think this was a weekly. Andrew sent that out a week ago, so it was a weekly, and we were prepared to take delivery, okay, and the premium. So that was the idea behind that, to take advantage of the inflated premium, okay. Okay, so I think I answered that. Pow. Nice about B is revisiting the giant triangle. Right, so back to BE. Right, so it's revisiting the range high of this consolidation. So yeah, I can't argue with the location, right? Great location. This is a great opportunity. These are the kind of opportunities I like, where it revisits the range where it broke out of, and often the resistance becomes a support, right? And it's acting that way because you can see there's some buying in there. It's just not enough, okay? But definitely like it. Okay, let me see what else here. Yeah, so I may even call Pal. You always, Pal. You had a stock that you called, and I can't remember the name of it, but it had a similar setup going on, and I wanted to, I completely forgot the symbol, but I don't even remember what the stock was about. Anyway, take a look at it for fun. Okay, it was been junk. Okay, so let's take a look. Now this is a favorite one here of Andrew. He's been talking about this one forever. In fact, he owns a ton of it, I think, from like an average price of like $7 or something, because they're a good company. Now, one idea behind this, and this is not a joke actually, pal, even though the stock has been beat up for so long, they have their hands in everything. And when it comes to, I think, what was it, renewable energy, they're like number one in like renewable energy. So this thing, when that whole thing starts to really go, this thing has a lot of potential, and it's still very cheap. So this is, and plus they basically, it's a huge company. They're not going out of business anytime soon. So this is a perfect like long-term idea, great investment. I think they pay a dividend. I'm not sure. I think they do. But this is this is one that's just off of everyone's radar. This pop today is nice. Like, you can't, a smaller time frame, what are you going to do with this? I mean, there's no reason to chase it. Something like this, again, you just average in. One technique that Andrew talks about a lot with something like this, pal, the one, it was like a couple of weeks ago. You mentioned it like a couple of weeks ago, and I've been meaning to go back and see which one it was, but I really liked it, and I can't remember. It's probably about 2 or 3 weeks ago that you mentioned it in the stream here. So, yeah, well, since Andrews is occupied, maybe you could just take his spot. Okay, so for GE, like I said, with something like this, Andrew has an interesting technique, which we've talked about before. It's just each month, right? It's you just go and you just average into it. You buy, you just invest some money each month, no matter what the price is. You just buy some, right? So sometimes you'll be buying at the high, sometimes you buy the middle, sometimes you'll be buying the low. But each month, at the beginning of the month or the middle of the month, you just buy. You take some money. Okay, I'm gonna invest $100 each month into this thing and just buy some shares, right? So you're just basically going to accumulate and accumulate and accumulate. Now, this is a very popular technique with drips, where it's the investment that you're making, the dividend payments get reinvested back into the stock, and over time it really starts to compound. But it takes a lot of time. Anyway, but you can still use that same technique with stocks like this, where you just buy some and you just keep buying some. Now, this one has a lot of long-term potential because of its renewable energy situation. Now, again, I don't follow fundamentals, so this is a good question for Andrew. Pal, you should come into the chat room and ask him, because he'll talk to you about this one for hours. But I like the structure. Okay, I mean, I like the fact that it's got the higher low in place and it's breaking out. It's taken out a resistance here. This is what you want to see. See that resistance? What is that? 730 basically, and it closed above. Okay, so it's starting to change. Okay, so the beginning of the change was back here in June. It took a long time for this stupid thing to go, but the double bottom, okay, and as you can see, it tried and then it consolidated for a while. But the fact that it held the higher low and it's starting to go, that's some nice confirmation. Now, you got some time for this thing to go. The next inflection point on something like this thing, once it starts to push like the $8 area, you're looking at like 10. So it's not like, this is not a big mover, obviously, not like Workhorse, but they have a lot of reasons for this thing to go higher, okay? Fundamental reasons, which is good. It's a long-term play. Now, Options, if you're interested in options, they're going to be super cheap because no one's going to believe in them. I would go at least a year or two out, okay, with options. Year or two on options, okay, especially if you're going to do out of the money. You can even do maybe at the money or in the money. Those will be more expensive, obviously, but with all that time value, it's like owning the stock without having to buy the stock, okay, if you're buying long options. If you want, another thing you can consider for something like this, short a put on it if you want to take delivery. The premiums aren't going to be very high because this thing is not really a mover. But if you want to get paid, you want to get paid to buy 100 shares of GE, you sell a $7 put front month, maybe you'll get like 50 cents for it or something, okay, or $50. You're getting paid $50 to take delivery if it pulls back a little bit, right? Why not? Where's this thing going to go? To zero? Again, this isn't CGC. So there's some opportunity there, but it's really long term and you have to be really patient with it, okay? So other stock that might have been, okay, let's take a look. Was it VUZI? Let me see. I'll tell you in 1 second. I don't think it was. Maybe it was VUZI. Maybe no, but I think you called it sooner than because the pattern looked like this. The stock that you called, the pattern looked very similar to this right here. But I thought it was sooner. Let me take a look here. SNDR. Let's see. Maybe it was that one. Let me see. I think it was this one. Because you called it more recently, and it was that there was like a pin bar there. I think it was this one. Let me check out CYRX. Let's see. I don't think it was this one. No. I think it was... No, it wasn't. Nice double bottom there. That's consolidating. No, I think it was Snyder, SNDR. I think it was this one. Because I remember it was like a pin bar situation. It was like a pin bar situation. I could see this thing is, yeah, right. Because the pin, you had two pin bars and it's consolidating. This is the one. Right, okay, so I see it didn't really go anywhere yet, but it's still in a good location. Okay, all right, no problem. But those are some good stocks, right? Some good situations there. Let's open up Pow's. Yeah, right. We'll have another stock picker. Yeah. So no, nice pick. There's just no reason to get in yet. But yeah, Pow picked some good ones, some nice ideas. Cool. So thanks for bringing that up. Thanks for the reminder there. All right. So I think I answered everyone's questions. Do I have any other questions from anyone here? Photo, if you're still there, just hang in there. You'll be all right. It's just you have to learn some of these ins and outs of options, just basic options things, and it's best if you do that without having to risk a lot of real money, because you still have some mistakes to be made, okay? And it's you really learn your lesson when they're expensive. You're like, man, I'm not going to do that again. Trust me, I've made plenty of those, okay? So sometimes that's the only way to learn. But anyway, okay, so I just wanted to mention that. And what's hold on, is there another one on the radar that we were looking at here? I'm just trying to think. Oh, yeah, GRPN. Yeah, so just hang in there, Photo. Hang in there, and you just have to get through these tough times. Trading is hard. It's probably one of the hardest things you can do, and the hardest part is not reading a chart. The hardest part is the psychological factor of dealing with situations like this where you get hammered and you lose a lot of money. The psychological effects of that is what's hard. It's very easy to give up, and most people do. Okay, after a couple of months or maybe even a couple of years, people give up. And that's why so many of these educational gurus and all these that's why they ask for so much money up front, because they know you're going to lose it to the market and give up. So they figure, let me get as much money as I can out of this guy before he loses it to the market anyway and quits. That's why they charge $300 a month or $1,000 for training. They're trying to get as much as they can out of you before you quit. So don't quit. Just hang in there. You'll be okay. Okay? You're just learning some basic things. In the future, don't take such big risks. Don't put so much money at risk. Okay? So you're not going to make a lot of money when you're right, but the idea is to build up that consistency first. And then once you have that comfort and consistency, and I know it's frustrating because 2 years into it, you figure, oh, I put 2 years into this. I should be getting good at this now. But it actually takes longer. Okay? It takes to get the basics, to really get comfortable with the basics. I know no one wants to hear this, but it took me 10 years, 10 years to get comfortable with the basics. That means I wasn't really making money. I'd make some, I'd give it back, you know, mostly break even, a lot of mistakes still. But at 10 years, you figure I should know what I'm doing by now. It took me 10 years, right, to really get like comfortable with the basics. And then I didn't really get anywhere until I got some training from SMB, and there was a guy there that really opened my eyes to, you know, to what I was doing wrong. And that really was a big help. Anyway, so just hang in there. It takes time. You have to be patient, okay? So you'll be okay. Now, Groupon. This is another one I'm looking at. Like, I'm looking at this one like Nicola. Now, I know, you know, everyone knows what they do with their coupons and all that stuff. And I know small businesses have been, you know, really hurting in this situation. But look at the high or low, right? It's finding support on this gap. Now, today's candle looks horrible. All right, so I wouldn't be in a hurry to buy this thing just yet. But if this thing holds, you know, you got some room here to pop, okay? 20 to like the low 30s. It could, if that high or low establishes itself, you may see those mid to high 30s if it tries to push that high again. So just another one to keep on your radar. This one would also probably be a good options play for a deep out of the money call, you know, with 3, 4, 5, 6 months out, something like that, because you need time for this thing to do its thing. You know, like look at Jumia real quick. All right, I'm going to wrap this up soon. I know I keep talking. I'm just look at Jumia. Look at Jumia. Look at this. So this was a trade of the week. Okay. The buy stop was at 850, which a lot of people in our chat room got into this. Are we at target 3 yet? So today's close is 1522. We went through all 3 targets on this thing, on Jumia. This was a trade of the week. Wow, nice move. But if you had bought the options on this, I'm going to tell you right now, because I think DJ got some. We were talking about these. Around when this thing was here, okay, when it was fooling around that $850, that 850 area, and photo, like, so just to give you an idea, this is a home run right here. At the options for a year and 3 months out, because I remember I was looking at them specifically. The options here for a year and 3 months were $2.50. $2.50 for $15 call options for a year and 3 months. We're at $15 now. It's only been a few days, okay, or maybe 10 days. So you can only imagine what those calls are worth right now, okay? They were $2.50. They're probably now $8 or $9, okay? That's a home run in a few days. And there's still all that, a year and 3 months for $2.50. Why were they so cheap? Because everyone hated them. No one was paying attention at these levels. Ah, Jumia sucks. They're whatever. And here we go. Okay? So, okay. Oh, from $2 to, okay, DJ. Yeah, I like Groupon. So this is the type of move I'm looking at, you know, looking for Groupon as well. But this is an options home run. That's how you play them. A year and 3 months of time for $2.50, and now I'm sure they got to be worth $10 now, because there's so much time in those, and now those are deep in the money calls. And so yeah, look up the $15 call for, like, I think it was January of 22 or something like that, or April of 22. A lot of time, and they were $2.50 when it was fooling around here. So just wanted to point that out. Wow, what a home run this one is. Target 3 was $13.50. What was I thinking? I should have put target 3 at 20. No, I'm just kidding. The reward risk was 2.6. So see, you're winning more than 2 for every 1 that you're risking. That's how you make money. So nice on Jumia. I'm going to have to send this out to people and let everyone know we had another nice big winner here, because that's how we get customers. Okay. Anyway. But as you can see, these are real trades, and people took this trade. I know a bunch of people in the chat room took this trade. So nice job there if you guys got this. DJ, you get this one? I think DJ, you were in this one. Anyway, all right, you guys. So if I don't have any other questions, let's see. I've been talking for a long time, but it's Friday. Yeah, okay. been talking for a while. I just like to talk a lot. You know how it goes. All right, so I'll leave you with that. If you guys have any questions, please let me know. Andrew will be back in the chat room on Monday. You can ask him. Ask him. I want you guys to ask him. Hey, Andrew, where were you on Friday? Just ask him. See what he tells you. All right, so if you're new to Greenbridge, please make sure you subscribe to the channel here. Like the video if you found my video helpful. Also, if you can share it with your social network, that would be very helpful. Really would appreciate that. Also, check out our website, greenbridgeinvesting.com. We do have swing trade signals by text and by email. This was a trade of the week, which we sent out to all of our free members. If you're a free member, we send these out every Tuesday or Wednesday. You get a trade in your email. We don't send these by text. We only send these by email. Okay? And, you know, some of these work out really well. They don't all work out like this, but the track record's been pretty decent on a lot of these. So the idea is to show you how our swing trades work, okay? What they're based on and what their outcome is. If you want more trades like this, obviously you become an active investor and you have access to more trade ideas. We also have portfolio management ideas that we send out by email, and we have our chat room where we share updates and insight each day, okay? So check that out. We have a 7-day free trial on our membership. I encourage you, if you're not a member, I encourage you to start that trial because we are going to raise our prices. And if you remember, at the time that we raise our membership prices, you will not be affected because we're not going to raise our prices on members. We're going to raise our prices for people that are not members. Okay? So we're going to be doing that soon. So if you're interested, check out the 7-day free trial, see if you like it, and you'll have an opportunity to lock in our current prices. All right, so I'm going to leave you guys with that. If you don't have any other questions, let me know. Otherwise, you can ask us in the chat. Come to our chat room. We have a free one. You can ask questions in there. And that's it. So $8.75. Wow. Those options were $2.50. Okay? $2.50 like 8 days ago. 1, 2, 3, 4, 5, 6. Yeah, about 8 or 9 days ago. Okay, so from $2.50 to $8.75. I sold Jamia, but sold it. Oh, okay. No problem. Yeah, I see that. You're right. It was a little tricky there, but you still made some money. When you have a situation like that, just let it run. A lot of times you just let it run. But okay, hey, look, you made money. Who cares? Right? You're never going to get the top. You're never going to get the bottom. Doesn't matter. It's green, and that's all that matters. Nice job. All right, you guys. So I'm going to leave you at that. Enjoy the rest of your Friday. We'll be back. I'll be looking for things. Probably if I send anything out like on the Euro, it'll probably be on Monday, not on Sunday night. Okay. Also, Groupon I'm looking at, and we'll see if that Nicola situation improves. All right. No problem. I hope you guys enjoyed this, and I will talk to you next time. Enjoy the rest of your day or evening, wherever you are, and I'll see you then. Thank you. Thank you for watching.